Okay, good afternoon and welcome, you beautiful human beings. Guys, I was jamming out to the music. I almost forgot to go live. Just had to double check. From wherever in the world you're joining us, welcome. It is Monday. Again, it's the 11th of September. We have a beautiful trading week ahead of us. And I spent a couple of hours on the charts this morning, really just diving deep, resetting what we know from the past and just re-looking at things from a fresh perspective. And all I can say is, guys, I am super excited for what we're going to be seeing coming up in the next week, the next 2 weeks, over this next month of trading, because there's some really beautiful trading opportunities across the board. Now, I'm just going to state this. There's been a lot of ask and a lot of queries over when we're going to get the next golden nugget trading, and I will be sitting down over the course of today, once we're done with our live, once we're done with the US Open, and looking at where we will be scheduling that in. So it will be in the next week, the next 2 weeks, and we'll go deep on the golden nugget strategy, as well as just taking things a little bit further. I did promise you there's another 2 opportunities that also exist in a trading day for you to be able to capitalize on, that just happen every single day, free of charge, a way to print money in the market. So I will be scheduling that. I will let you guys know where we're at. So first and foremost, I want to start the theme of today by just talking about what is obvious in the world right now, and what I believe the markets have priced in as almost a certainty at this point in time. And we don't really have to go all too far to find that. I'm going to be showing you guys pretty much the landing page of Yahoo Finance. Now, there's an article saying the Feds may hold rates steady, but that doesn't mean it's done, right? Now, I think this has become essentially a known factor within the markets. We've seen that the data has shown that the Fed's efforts thus far have at least paid off in some way, shape, or form from the data that we've got. It has been a little bit mixed, but it's certainly showing a trend that they are fighting inflation in some sort of way, shape, or form. So a Fed hold, right, for this next interest rate announcement, I think the markets are pricing. It's very, very clear from what we can see on indices, very clear of what we can see on gold. I think the market has priced it in. The data reflects it. Feds will hold rates steady. Does it mean they won't have another hike? No, that does not mean that, right? It's very, very likely a hike will be held as a sort of reserve card for if they have to play this, to kind of just further push rates, or at least inflation rates back to just moderate them, right, if we see inflation run away. Now that leads me into the next talking point, which is what we're about to get this week, right? I do see we have a bit of a flicker, not 100% sure where that's coming from, but that leads me into the next item that we're going to be getting in this week, right? This week, Wednesday, we're going to be getting the next round of CPI data, reflecting basically what's happened in August, right? Now, this is going to be an interesting one, and I've spent a bit of time going over the data and what we could potentially see here. So let me show you guys what it is I'm talking about. So Wednesday, at 2:30, we are going to be receiving the CPI data, consumer price inflation data, otherwise known as just general inflation data, at 2:30 on Wednesday, right? That'll be the 13th. Now, what's interesting about this data, and I've gone through some of the trends, and we're basically going to be looking at, so I'm just going to give a quick touch on month for the CPI as well as the core CPI. First, we're going to just quickly have a look here at the core CPI, right? This excludes volatile items such as food and energy. And what I just want you to see here is that in most cases, the trend has been that the forecast has been coming down and we've received results that are lower than forecast. So what does that mean? In summary, inflation has been coming down, specifically on the core side of things. Now, what's interesting about analyst expectations for this Wednesday is this is the first month-on-month reading. Again, this is just straight CPI, right? This is the first reading that we're seeing that analysts are expecting growth, or at least a 0.6% increase in inflation. Now, the reason that this is obviously so high is obviously due to the amount of buying pressure we've seen from some of the consumer data, the retail sales data. These have all been surprise statistics to the top side. So it's not a stretch to reason that US consumers have been extremely resilient. We've seen that in past data, but economists are forecasting a 0.6% increase in normal base inflation. Now, what this represents to us as traders is an opportunity, right? Whenever we see a forecast that is extremely high, right, we're seeing, over the past couple months of CPI releases, we've seen a 0.2, 0.3, 0.4, but seeing this 0.6% forecast means it gives us quite a bit of room to the downside to see essentially inflation coming lower than that 0.6%. This would be bad for the dollar and good for most of our views in terms of the market. So when it comes to CPI, and you guys have known this for a while, fundamentals are quite difficult to trade, and specifically something so widely watched like CPI, NFP, PPI, etc. They usually come with a lot of conditions, right? They come with a lot of moves, a lot of whipsaws, a lot of reverse movements. And so what we're going to do this Wednesday is something slightly different in the sense that we are looking at only trading if we receive a result that is within our expectations, within where price action is on Wednesday. Now, that's quite exciting because we have quite a few opportunities, and a lot of these are continuations from last week. So this morning after gym, I'm still in my gym clothes, came back and said, all right, let's clean up some charts here. Let's tidy up our outlook, and let's just have a look that we are seeing the same things, right? That bias has not changed. And this is what we're going to see. Very, very similar to last week. We've just cleaned it up and given a little bit of more detail as to what we can potentially see. So at the moment, we're currently focusing on the dollar index. And as we spoke about last week, we've seen times and moments, specifically referring to the 7th of March, where the dollar index popped out temporarily and then violently fell back into structure. Now, if you look at where we are now, we've popped out temporarily. And obviously, I want to just give a caveat here that the dollar index was only out of structure for about 2 or 3 trading days. But this was also very, very closely aligned with the previous CPI data release that was in March. Where we are at this moment in time, we've popped out of the dollar index. Dollar index was extremely strong over the last trading week, but ultimately it's starting to look like it's slowing down in momentum. So where we are now is again that perfect storm situation that if we see that weaker dollar, we drop back into index range, we could then be set up for a really, really good, let's have a look here. This is essentially 44 trading days of the dollar trading in a negative trajectory. Now, again, there's a couple things that are in the pipelines that could upset this. The first one being that the Federal Reserve will come on and say, hey, listen, interest rates will remain flat. The market's priced that in. I don't see that being a huge positive to the markets and negative towards the dollar. I do believe markets have priced this in. It's a wide consensus that this would be the right choice. But what could hurt or at least boost the dollar and hurt the markets is that, again, what we're seeing in the news is that, yes, we're going to keep interest rates flat, but, we've got this, secret rocket launch in our backpack that we will, launch provided, they don't see enough dates on the inflation side. So we just have to be a little bit careful of that. However, we are going to take things a little bit differently for September, where we're going to rely on the price action. We're going to allow the fundamentals to trade out. And this is something that if you've, for those of you that are a bit closer to me and have been following for a while, I've shared with you in the past that there's a very amazing correlation that price action, and we keep saying this price action is king, but where does this come from, right? So I just want to speak about this for a second, because this is really what the theme of September is really going to be, is that what we've seen over the past, and for those of you who've read up about, extreme long-term traders or guys that have been in this space for 20, 30 years before it was even, digital in this way, shape and form that we see it today, there's been strategies throughout the history of time, right? There's been SMC, smart money concept like strategies for all over, that stood the test of time throughout history, right? There's been ones come and go, they change, they're profitable, they don't work, they change, they're profitable, they don't work. The one thing has stood the test of time is pure price action, right? And in this is its simplest form, right? Channels, market structures, Fibonacci, these are the most basic forms of price action. But the reason why we refer to price action being king is rather a little bit of a deeper insight. And this insight comes in the sense that what we see from a fundamental data perspective, yes, fundamentals can be fun sometimes, right? I know for some of you, it hasn't always been great, but what we've seen over the test of time is that fundamentals generally align to the price action even after the price action's already been established. So what do I mean by this? In a lot of the cases, right, when we see breakouts of market formations, right, these often predate price action moves that come later on in time, right? And there's a couple reasons to this. And the first main and probably the largest reason to this is the fact that when we see markets move or change from a price action structure, we're talking about large, intelligent money that is essentially doing these massive volumes and these massive models of where price could be, should be, and where they want price to be. And often price is moving now for the next 2-3 months. It's moving now in anticipation of where the next 2-3 months may end up being. And that is why we see price action come and show us before we receive the fundamentals, before we receive these bigger moves, that there is a change in momentum. And a lot of the times when you stick with price action, you ignore some of the noise that's out there, you end up with a better result in terms of long-term trading. So then you may ask and say, well, Dane, but if you know this, and if you've studied this, and if you've been through this, and you've seen this, why do we pay attention to the fundamentals? Well, there's a side of that which you need to understand, right? There's a side of where the world is and what is happening in the world and what is happening with inflation, why these numbers are so important, that one has to consider and understand to be able to better understand the trajectory of where money is going. And a case in point of this would be the fact that when interest rates are raised, the dollar is artificially stimulated and boosted through multiple tools, right? The one tool be quantitative easing, right? One tool would be, and quantitative easing is literally just the government printing money, right? Now that would be a fundamental data point. Interest rates are raised, or interest rates are dropped, apologies. So time of turmoil, interest rates are dropped, quantitative easing kicks in, and the government prints a bunch of money, stimulates and drops it into the economy. The dollar is boosted, and other items or other securities start to suffer because they're not as attractive. Now that's a fundamental data point, but it's important to understand the mechanism of how it works, because it helps to give us a long-term bias on the market. So there's a bit of a caveat. Trading the fundamentals takes time, takes patience. Sometimes it's a massive win, sometimes it's break even, and sometimes we have some losses. But it is fun nevertheless, and it teaches you to manage your risk, manage your patience, etc. So that is going to be the theme for September. We're going to remain as price action being king. And to fully validate this, if you want to call it experiment in real life trading, we're going to be following a very simple rule. And the rule is going to be that if the dollar index breaks market structure or breaks back into market structure, we're going to see a couple of things happen from that, right? And regardless of interest rates, of CPI, we want to see, will price action remain king based on what we're seeing? So the first thing is going to be Euro USD. So I've tidied up Euro USD a little bit. Again, I'm in a Euro USD buy already from last week at this market bottom. But what we are looking at for Euro USD is a few specific things. Now, Euro USD bottomed out. This is currently looking at a daily time frame. We bottomed out on the 78.6, but I did explain we can make a push to that 88.2, and we made a push on a slight dip past and then ultimately recovered. Now, I want us to pay a lot of attention to what the candlesticks are going to be telling us, and I'll show you why the importance of this when we get closer to gold, because it's going to give us a major clue as to what's happening in the markets, right? We can see as soon as price starts to thin out, we're seeing a lot of challenges north and south on Euro USD, right? So we're seeing massive pin bars, price struggling to get topside, price struggling to get downside, and ultimately price is being squeezed to try and determine its fair value, right? Now, once price has established fair value, we start to see these breakout formations. We start to see some of these bigger, more sure candles that start to emerge. Now, if we have a look at Euro USD in its formation, this is a 4-hour time frame, but still we can observe what price is trying to do, what price was trying to do in terms of trying to squeeze out and find out where its fair value is. We got pretty much on what was that? Was that Friday? We got that major push up and rejection that pulled back down, and then looking at Friday evening, we sort of saw price stagnate out. However, we were at the lowest possible point, being that 88.2, right? Again, daily time frame, and maybe just zooming out much larger, we can see that we are in this channel, this rising channel. So the market momentum here is certainly bullish. We have a bullish outlook, and again, a weaker dollar would boost that Euro USD topside opportunity. Now, again, we've also looked at USD CHF. So what I'm talking about when I'm speaking about Euro USD is what are we looking at here? Saying, Dan, great, right? This is analysis, but what are we really going to do about this trade? And there's a few things here. First things first is that the safest entry point for Euro USD is going to always be beyond the next level, right? Beyond the next fib level, if you will. Now, our next level in Euro USD currently sits north of our current position, 1.0. So 1 euro buying $1.07 and 71 pips plus minus is where that zone is. The safest position is always going to be a breakthrough of the previous support / resistance or fib level, and then a move towards the top side. However, in this particular case, I'm taking some lower trades at lower levels, lower risk, right? As price moves, we are looking at trying to get in for a long on Euro USD. However, that's not the same on USD CHF. The USD CHF, I think, is going to give us a better entry, and that is something that is much closer to being ready. So USD CHF, again, this is a descending channel. This is a 1-day time frame, and USD CHF is basically pushed out to its max range here. Now, previously, as we had it last week, our fib levels were kind of sitting in that zone right there, right? Maybe something like that, but something along this level here is where we previously had it. And I was really looking at it and concerned with why, we're pushing out into these zones, why we're breaking structure. And I just remapped out, where the zone is and where it should be. And that's a much clearer indication from a price action perspective of where the fib should be. Now, you guys will remember this in the academy, and I taught this very clearly, is that fib levels are going to be based on what you see, what I see, where I think the impulse is, where you think the impulse is. A lot of the times what you want it to do is you want your levels to line up with pure price action, right? So you want your support and resistance zones to be clearly and visibly rejecting or bouncing off of these zones to confirm that it's clean and true. Now, this is something I try and do every week. Obviously, some weeks are longer than others, and I don't always get around to it, but you want to, even if you've got sort of a prediction on price, or you've got a price action setup, specifically longer term stuff. Smaller term stuff doesn't count, doesn't really matter as much from a scalping perspective, but for a bigger view on what's happening on price, you generally want to go and save that chart and clear out and start afresh, and just make sure that what you saw before is what you're seeing now, and that is an accurate representation, right? And that is, again, part and parcel of why we have the community, for you to share your views and say, hey guys, I'm seeing this price action, what do you think? And that might take someone like myself or one of the other leaders to come in and say, hey, great, but just look at your levels. You started your let's say your fib in the wrong level, right? As an example. But moving back to the charts on USD CHF. Now, originally, I wanted USD CHF to kind of hit this level nice and tidy and start to break this immediate market structure. We didn't get that. But what we have got instead is, if we have a look on a 4-hour time frame, and I drew this original channel, let's just have a look here. I drew this channel last week, right? And I confirmed it's still valid today, is that we've made that push up into that fib. We've hit that fib pretty hard, the 61.8. and we've started that rejection process. Now I've popped in a sell right there, right on that rejection, and that was, just looking at that little bit of a pullback. This is on Friday evening, looking at the fact that we moved out of that, but I'm pretty happy to add in some positions on USD CHF at this moment in time. Now there's a couple reasons for that. There's a couple reasons why I'm looking to trade on USD CHF as well as Euro USD, predicting a dollar weakness for two main reasons. The first main reason is the fact that our risk to reward here, even with a stop loss of 40 or 50 pips, right, still means that we are looking at, over the period of this trade moving, we have a swing trade that can yield 200-300 pips, right? So we still have a 1-to-4 risk reward ratio bare minimum, meaning we've got 1 or 2 times to get this right. And even if we fail on both occasions, on the third time when we get that right, we are still net positive. We've still made more money than we've lost, provided your risk reward ratio is correct. So I'm very, very happy to be wrong on this twice to try and get in on a long-term trade. So in Premium Plus, I will be marking out the levels. I'll be having a look at where that's going to be. I'm trying not to exceed about 40 or 50 pips from a stop loss perspective, but we're going to try and look at going short on USD CHF, and I will send that order to Premium Plus. We're busy finalizing some of those levels. Now, gold is quite an interesting one. Right now, gold we've obviously been paying quite a bit of attention to over the last bit. It was probably one of the best trades towards the end of August last month. Having a look at that breakout, we took that long move in terms of that swing, 400 plus pips. We ideally wanted to target the 1950 range. If you guys go back and have a look at my messages or the teachings on this, we were targeting the 1915 range, and 1950, we got that. But having a look at where gold is currently now in terms of its pullback, I want you just to pay attention to the price action, right? And when I talk about the price action, I just want you to look at what the candles are saying. Now, if you go back into the academy, again, I spoke about candles and candlesticks being like a language, right? In the sense that, yes, you can see candles move and they're an expression of price or data in a visual form. But if you go and just spend a little bit of time looking at it, it's going to tell you a lot more than just, was that particular candle period bullish or bearish? What we're going to start to see here, and I want to just maybe go through the story prior to speaking about where we are now, just so you fully can take this in and appreciate what we're doing on gold right now, is that when we have a look at gold, right, we got out of this long-term bear trend. We started a little bit of a breakout process. There's a little bit of unsurety, but at that point right there, right on the 22nd of August, we got the first real indication that price is exhausted. There aren't enough sellers in the space, and sellers being exhausted, we might be going into a buying phase, right? The buying phase came in a day or two later. We got that massive bull momentum that came into the market, and then we got trapped. We knew that these fib levels existed. We got stuck between two fib levels, right? The 38.2 and the 23.6 known zones, which is great, no issues whatsoever. However, we could see that while we're in the zone, price is telling us there's a bit of unsurety. We're seeing, buyers and sellers being exhausted on either side of the fence. We're trapped between these two levels. Once we got to the 29th, we received this massive bounce of volume, right? If you guys remember, that's what everybody was raving about gold. Everybody's celebrating gold. Everyone's saying it's going to go higher. It's going to go further. But ultimately, it meant in 4 hours, gold went over 215 pips. We can see that surety. We can see those moves. After that, gold ranged and meandered. We made a punch to the 61.8, just over there behind the comments there. Some of these fib levels are behind the comments. If it does bother you, just let me know. I'll remove the comments. But we made the punch to the 61.8. We tried to get over it and we failed at, right? Ultimately, on the 5th last week, we started to get in that mixed dollar CPI or mixed dollar data, and that caused a bit of a break in structure. We've been primarily in a sell state from basically the beginning, I would say middle of last week. We've been in a sell state for gold. I haven't called out any sells in gold because, again, that's not where my long-term view is currently sitting. But where we are now, again, just looking at the story of price, you can see again we're kind of trapped between these two levels here. Having a look at a 1 hour time frame, you very, very clearly see that price is making some really big attempts and then ultimately just correcting. Some really big attempts and correcting. So whilst we're in the zone, right, and we can pretty much see that price is unsure about where it wants to go on the price of gold, we have a very, very strong level. Even though it doesn't look extremely strong, it is. 1922 on the price of gold is quite a solid level, right? If we go back in time and just have a look at what 1922 represents, it represents a whole host of, rejection / support levels for the price of gold at that level. Price has gone through it a multitude of times, but it still represents a fairly strong level just south of our position. So for me, looking at the price of gold, again, I would like to see that weaker dollar, but we can also know, and obviously you guys have known this in the past, is that when there's sort of a lot of happening in the world, based on CPI, based on inflation, we can also see a break in correlation between the price of gold and the dollar's value. So I'm not linking the gold trade to any sort of dollar type forecast. What I'm merely looking for is I'm looking for a break in price over 1930. And again, the key zone would obviously be 1933. So I'll be quite cautious of a buy side break here. But again, I would also then be looking at a 1916 sell side zone, right? Now this is a 1 hour time frame. There's quite a lot of scalping that can happen between now and then. So jumping on a 15-minute time frame, you're going to see that gold is making some fairly straightforward moves. We saw this morning at the start of the golden nugget, we saw pretty much a immediate impulse in gold and then a sell-off, as we saw on some other instruments across the board. But for me, I'm looking at these zones, 1930 as well as 1916, for a potential break in the price of gold. Now, on some other accounts, I've got some alerts and emails set up that should we go close to these zones, we will be notified, and we'll start to analyze the volume at those zones to try and determine, are we going to be looking at breakouts, or are we going to start to look at reversals on those two particular zones. So that's kind of where our main focus is, and we're going to allow price action to determine the break here. We're not looking at the fundamentals. We're not going to be looking at news. We will be observant of news. Obviously, today being Monday, there isn't too much in the forecasts for news, but this is going to be pure price action driven across the board in terms of that actual breakout. Okay, US 30, Lucky saying so Lucky, we do have a discussions group, right? So the discussions group allows for people to talk about things. Only reason I don't enable commenting on Premium Plus is we have clients there who are high net worth, who don't necessarily want to be known, who don't want to be inboxed, to be messaged. And unfortunately, guys, that is probably, and I'll just talk about this quickly before we get to US 30 and US 100. It's one of the biggest issues with groups is that, you may have people in a group. Let's say we turn on commenting and posts. Everybody can see everybody else. And the issue with that is that people then come into the group and then advertise their services within the group. And we have high net worth individuals. We have politicians. We have multi-millionaires, if not multi-billionaires, or billionaires sitting inside of our groups. And they don't want to be spoken to. They don't want to be commented. They don't want to receive inboxes and things like that. And it's extremely important for us to protect Premium Plus members' identities. It's just the way it works, right? So discussions group is there. If you feel you'd like to share something, a discussions group is there. If I see your trading progress, if I see your trading journey, and you're profitable and you're consistent in the market, please inbox me and tell me you'd like to take your trading to the next level. And I have a leadership group that I'll look at your data and decide if I want to add you in there. Then I also have a private wealth series, which is a completely separate group, completely separate way of doing things. And we only look at long-term setups. We're not interested in scalping. We're not interested in trading every day. We want to place 1 or 2 trades a week that are long-term. So that's part of the private wealth series. So we have different groups for different things. Again, it just depends on what everybody's out there for, what everybody's doing. That's kind of what it's all about. Okay, so moving into USA 100. This is obviously something I want to, just dive a little bit deeper into. And again, we're going to look at this quickly on I think on a 4-hour time frame is where we're going to get the most data out of it. So again, just going back into terms of where we are with US 100 and just rewinding and just making sure we're all on the same page. US 100, again, NASDAQ has performed extremely well pre-COVID, right? Even in COVID itself, there's COVID's dip right next to my head there. There's COVID's dip. It was, 2 or 3 weeks, trading weeks of negative, and then just absolutely rallied. At the point where interest rates started to be raised, we saw, the worst year in Wall Street stock market history, right? US 100, NASDAQ pretty much tumbled. I don't know how many points this is. but it's a lot, 61,000 pips, right? So tumbled quite a bit. So from, $15,000 plus minus a share to $10,000, right? So massive pullback, right? What is that? $5,000. So 30% of its value essentially wiped out over these interest rate increases. Now that the interest rate increases have kind of come to a headwind, the start of this year, we've started to see the Fed saying, hey, we're going to start to look at relaxing. We're now into, back into this bull territory. I want to just point out that when we look at some of these levels, we're very keen on looking at the past and where prices made substantial sort of check-ins on resistance and support, but at a major level, right? When we go back and we start to have a look at, US 100's rise and subsequently its fall in terms of the interest rate increases, etc., we pay a lot of attention to some of these previous levels. And one of these levels I just want to point out is sitting at that 15,260, 15,270. It's all very critical range for the price of US 100. I just want to state that. Now, if we pull out of, zoom out a little bit in terms of, 2022 happened, and we started to get that breakout that started beginning of this year. So pretty much on the dot, beginning of this year, second week of January, we saw US 100 start to recover on the hopes that the Fed would sort of lay off on this sort of campaign that they've been going on. And that campaign kind of came to an end towards the 17th of July. And basically, I would say the start of August, we received pretty much that sideways momentum, or at least that breakout zone. Now, we call this very specifically towards the end of July, right? Start of August, end July, we explained that US 100 is breaking out of structure, which is quite rare. And, that's obviously the trade, whether people took it or not, obviously up to them. But we've seen that pullback. Now, the interesting part about where we are right now is that we've seen that this move can be considered an impulse. And regardless of whether that is considered a pullback of another larger impulses, the fib levels still apply. So that is something I'm not 100% sure if everybody knows, but the fib levels apply in both directions, right? So if it's a bull move, bull impulse, and you draw it down, great. If it's a retracement that then becomes an extension, it can still apply. Those levels stay the same, right? Example. Right, the 23.6 is an inverted level of the 88.2. The 38.2 is an inverted level of the 61.8. I don't know if you guys get that, but it's just what it is. So having a look at that, we made the pushback of the recovery, right, in terms of August, back up into that 61.8. Obviously, massive sell-off, fear in the market, and we started to rebuild momentum all the way up into that 78.6. 78.6 price hit and attempted an 88.2. I don't think quite made it, but now we've started to kind of tumble back down a little bit, right? We reached that low, having a look at the 7th, right? We reached that market bottom on the 7th, and we're now in this situation where we're starting to see price gain that momentum toward the top side. We've got similar signs and signals to gold that price is kind of unsure of itself. But again, looking at today, and I want to just explain this as a bit of a side truth. When we see, and how many people are on here, because I'm not going to repeat this in the main groups. When we see the golden nugget push, right, that is essentially the start of a different session, start of a different session, London, right? When we see that momentum push into markets, we often see the US session takes that volume, right, and goes with it, or we see a reversal in the US session. Now, the reason we want to be in a trade from the golden nugget all the way into the US time is that if we receive a reversal, we're going to be taken out at the highest possible point on the US session. If we see a continuation, we're already in a trade with zero risk at that point in time by the time that session goes to market, right? So as an example here, we saw the golden nugget start to accumulate. Let's have a look here, right? At 10 a.m. So 10 a.m. on the dot, I saw the push to the top side. I bought into some NASDAQ. My stop loss is way below because I've also got some previous buys down here just next to my head over there. And my stop losses are covering those bigger buys or more buys, if you will, but I've got enough profit there to make up for that particular stop loss. And what you'll start to see over a period of time when you trust the golden nugget is that it'll often go in the direction of the US time, provided you can hold on to it. So looking at where we are now from that particular perspective, right, is that we are above the previous fib level, right? This zone here, the 61.8 key zone. And again, to validate a key zone, you want to see a rejection on a bullish momentum. So a market is bullish here, makes a clean rejection, and you also want to see a rejection of a market that's selling off. So we got, that double confirmation there. So we know it's a clear zone. We've cleared that level. But where we are right now is we're in a pretty much a little bit of a dangerous zone, in the sense that we may very, very well for this US session potentially see some sort of pullback into that zone. So for the New York Stock Exchange, right, I'm looking at, does the US 100 in this particular moment in time, will she clear out the current levels above her? It's going to be 14 or 15,440 plus minus. If she does, right, she has nothing stopping her to make that 15,540. So we've got a good, clean and tidy 1,000 pips above us should she break through the New York Stock Exchange. Right, that remains to be seen. The more likely outlook from a pure price action perspective is that we will make some sort of rejection here and potentially sell back down into this zone, 15,331 plus minus, right? So we have north 1,000 pips, south 1,000 pips, but ultimately in terms of the bigger price action way of doing things here, we can certainly see the momentum here is long-term bullish. So what are we trying to do, right? We're trying to get in long-term trades. We're talking about the US 100. We're talking about US 30. These are legendary indices, right? Delivering, double-digit figures year on year in terms of ROI, even in the worst of times. So you can't really go too wrong holding a indice trade like this long-term. So obviously we want to be in a long-term trade, specifically if it's showing some sort of bullish momentum, right? So that's specifically on US 100. US 30, right? Very, very similar type of thing here. The only difference with US 30 is that the golden nugget had that initial push, right? As I said in the groups, from the time of entry from the golden nugget, I got in a little bit late, probably 5-10 minutes late because I was in gym, and we made a 425 push. She came down to entry, past entry, and it's kind of been a little bit sideways, and then made a little bit of a push earlier on, plus minus about 500 pips or so. However, again, as before, I've got some entries way earlier on US 30, probably about 3 or 4 different orders running up this different order block here. And so my profits from these trades far exceed any sort of golden nugget potential negative at this point in time. So I'm holding a multitude of trades long on US 30. But you might say, okay, Dane, but I'm not in US 30, so what do I do here? So very, very simply on US 30, you cannot deny the fact that we are still just having a look at, from the end of 2022, we're in this massive amount of bull momentum, right? US 30 has a very, very similar story to US 100 in the sense that, there's COVID, right there on that point over there. There's COVID. This is a weekly time frame. There's COVID. For a month, US 30 tumbled, made a massive gain. We see 2022 representing a similar type of pip count as COVID. If you take it from the start to the finish, maybe 80% of the pip count of COVID, and then that recovery, right? Recovery also started beginning of this year in terms of that actual breakout, right? Let's go to the beginning of the year, plus minus somewhere here, somewhere around about here. Okay, so there we go. So somewhere here is the breakout of this 2022 kind of bear move, whatever you want to call it. And now we're in this new trend of making higher highs and higher lows, right? With that being said, I measured out the last bull impulse, right? We can clearly see, as well as because of the fact we're in a bull market, the last impulse was there. Even though, right, we're seeing bigger bear candles, there's a bull impulse, right? So if we measure this from a fib perspective, we can see where price was pulling back to. We've seen in the past price pulled back to that 78.6, has not yet cleared the 38.2, came back to the 61.8. And this is very, very important to note, is that when price moves, price doesn't move in one direction, right? We don't go 78.6 and then just make a new high. Price will move, clear some levels, fail on one of them, fall back onto support. In this particular case, it was a 61.8. But the important thing about price right now in US30, very, very similar position to US 100, is that we are attempting to clear and stay above this 50 fib range, right? Now, if US 30 performed the exact same way as US 100 did today, we would have been way higher than this, but we had that substantial pullback after the golden nugget. So at the moment, the clear for me, I think the bigger opportunity sits on US 30 today to have a look at, does US 30 maintain price above the 50 fib level? For those of you who haven't drawn out the 50 fib level, does US 30 stay above that 34,670 on this US session, right? New York Stock Exchange open, does US 30 sit above this price? If it does, this will represent a pretty good entry, allowing us to have, 300-400 pips stop loss and some pretty good long positions in the market right now, right? We have 2 days between where we currently are right now and the CPI data on Wednesday. We do know that, Tuesday afternoon, prices might start moving a bit slower. Wednesday, certainly, the whole market is pretty much going to be waiting out for that CPI data, right? That's going to be driving the markets mad. That's going to be the main priority. I do believe between now and then, we should be able to essentially get ahead of the trade. And what I would like to do, in the perfect world, I would like to be in some buy positions on indices. I'd love to be in some buy positions on gold, potentially even as far as having a look at getting into some buy positions on Euro USD, sell positions on USD CHF by the time we get that CPI data release. If we can move our stop losses into profit, it means we will essentially have an inflation interest or inflation data release with zero risk, right? If it's in our favor, which based on what I showed you guys of the forecast, economists are forecasting a 0.6% inflation month-on-month increase, which is quite a big number, right? The inflation numbers would need to come out at 0.7, 0.8 to really shock the markets and stimulate the dollar and essentially invert all our current trades, which is an unlikely outcome. The more likely outcome is that at that 0.6, it's a substantially big number for them to forecast. Even a 0.5 or 0.4 would show that the economists were off by quite a bit and would essentially be a negative for the dollar. So there's quite a bit of space for us there. Obviously, if the CPI reads a clean number, right, that is the standard deviation is substantial, we will also enter trades on the CPI itself. So CPI release will be a trade-a-thon, right? We will cover the CPI live, we'll look for the numbers live, we'll trade that live, again, provided we have the right data that comes out. And please pay attention to the trades that are going to be given or the opportunities available between now and Wednesday, because again, we want to hold positions up into the CPI. So example, if we're in a profit, let's say on US 30 continues to rally, right? If we're in a profit and the data comes out, we may not re-enter because we're already in a profit. If you're not in a profit, you're not in those trades, you might not be able to just hold a risk-free position. So please just remember that the next 2-3 days of trading is going to be crucial. Try get it in a profitable position where our stop losses are in profit for that release. Now this happens from time to time. Every couple of quarters we get it right. We have profitable trades with stop losses in profit, and the fundamentals then further support our position, called a perfect storm. Now we sometimes get this wrong. Obviously the data can be mixed. We can see a whipsaw, but the once or twice it is right, it is beautifully right. We're talking about specific indices, thousands and thousands of pips, and it'd be a great way to have a midweek celebration. So that's the whole hope, that's the goal. We don't have a glass ball, we can't predict the market. We're simply looking at what has happened to try and forecast what could potentially happen, being ready, showing up, and executing based on the data that we receive. So that's what we're going to be looking at. I would like to issue opportunities on your USD CHF But depending what happens on gold, I may be looking at that too. I know a large part of the community shorted out gold as well at about 10:15, 10:30, somewhere around about there, 19:30, 19:29 range, which I think is a good trade considering this is currently a range. So we would like to buy outside of that range or sell below that range. That is going to be ideal. And again, US 30, like to see if it holds on the 50 fib by the time the New York Stock Exchange opens. And again, US 100, similar type of story. So for today, for this week, for September, we're going to see is price action truly king. And I do believe that if you stick around to the end of September, you will have a revelation over what price action can really do for your trading. Yes, we need to know what's happening in the world, but is it as important? Do you need to trade fundamentals to be profitable? Absolutely not. It's about just understanding what's happening in the world and applying it to your knowledge of what is happening in the market itself. Right. So that's really what I wanted to speak about today. There's about 4 or 5 other charts that I'm diving quite deep into. I'm finding some trends and patterns that when I'm ready, I will speak to you guys about. But for the time being, we will be looking at the next Golden Nugget second edition of the training, if you will. We will announce that into the groups, into Premium Plus. You guys can then go about your day and obviously get in there. Let's just see here. Okay, so everybody's seen, if you want to be added to the discussions group, just inbox the beautiful Miss Marsha Barts and she will get you added. You can post things there, ask for things. Just please don't give trade advice. Don't say, hey, we're buying this now, we're buying that now. We want to avoid that. Just simply, state what you're looking at, what you're doing, and share. You're more than welcome to share and obviously be respectful. Okay, guys, outside of that, we are waiting for markets to give us some sort of break in direction. But until we get that, you guys know the drill. Be safe, trade safe. I'll see you guys all a little bit later. Trades will be sent when they're ready. Until then, goodbye.